You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call around these parts the Option Block. Hopefully your favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of unusual activity, a whole smattering of your questions, some peering into the future, and you mix it all up with a nice little bow and you have the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 15 programs for you guys to download and stream at your leisure. Easiest place to do all that, of course, the mothership, the flagship, theoptionsinsider.com. While you're there, click on an article or two. We got quite a few of them up there all the time, all day long. News, cranking out breaking news from the options market, educational articles, analytical, a lot more UA than we get to profile on this show. And, of course, some strategy, all sorts of other fun stuff up there. And, of course, while you're there, you can always mainline the radio as well via all of the usual suspects, including just the call out right there on the homepage. And if you want to just get the mainline that audio even faster into your ear holes, well then, of course, iTunes, TuneIn, Stitcher, Google Play, iHeartRadio. I don't care where you go. Chances are we're going to be there. If we're not, if you use some obscure Lithuanian podcast store, let us know. We'll see if we can put our stuff up there for you as well. And if all that's too much work for you, just grab our app available for iOS, Android, and the beloved Fire OS. And however you listen to us, including those of you who can join us live every Friday, 3 p.m. Central, 4 p.m. Eastern, a little bit late today. We had some issues here in the studio. I blame the Rock Lobster, even though he's not here. And, of course, join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, right here via Mixlr, M-I-X-L-R. You can grab the link if you follow us on Twitter or Facebook, or just use it once and bookmark it. We're there every time we go live, same link every time, so you don't need to change it. And you can dive right in there and follow along with us, ask your questions, make fun of the Rock Lobster, all sorts of fun stuff you can do in there via Mixlr. And however you listen, we love to hear from you guys, so send in those questions, those comments. We'll get to a bunch of them today. Before we do that, let me introduce my cohorts here. Since I made fun of him, I might as well give him pride of place to give me his umbrage. None other than the Rock Lobster himself, Mr. Andrew Giovinazzi, who's sad he has to be here today because he'd rather be bass fishing. Mr. Rock Lobster, welcome back to the program, sir.
So let me get this straight. You couldn't plug your wires in, and yet you somehow find a way to blame just your humble co-host for Maine. All I can say is umbrage.
It's the long arm of Maine. It reaches out far beyond. It exceeds your grasp, sir, in many ways over there in the land of Maine, a.k.a. the land of umbrage. Isn't that what it says on your license plates over there? Maine, the land of umbrage.
I'll tell you, I think there might be a lot of Mainers that's a good that might be a good phrase for them.
Yep, that's good umbrage there.
Yeah,
that's about as good as my Maine gets. I'll give it another try next time. Moving a little closer to home, we are also joined by last week's host, the man joining us from that paradise on earth known as St. Charles, Illinois, Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. Fine job, sir, in the big chair last week while I was off gallivanting through New York City.
Oh, thank you for it. And I'm in such a good mood today. I wanted to claim umbrage for something, but I couldn't think of anything to claim umbrage for, so I'm just going to say it's great to be here.
All those Mainers stole all your umbrage. You got to get the umbrage quick the early bird gets the umbrage. Isn't that what they say there in Maine? That's how the sign goes.
I'd agree with
That's
that.
right below the license plate there. It's the land of umbrage is the early bird gets the umbrage. There we go. And before we consume all the umbrage in the room, I am also joined in studio by none other than Mr. Todd Rich, the president over there at Option with singular Monster Media. Mr. Todd, welcome back to the program. Nice to have you back in studio. Otherwise, who would drink all my coffee, sir?
Indeed. It's great to be here. Thanks for having me back. And I am gracious enough to come visit you personally in the office. I've kind of find it interesting that Andrew and Mike just don't want to come see you in person.
Yeah, they can't make the hike from Maine. But you're all the way down the river here. They're all the way in Maine. I think you could easily, they're equidistant in many ways. They could easily make the haul if they were so inclined, but clearly they are not. So you and I will have all the fun and all the tasty beverages here, Todd, as we move on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. Todd and I just chatting here in between segments. This is, of course, the portion of the program where we break down what was moving, what was shaking, what was lighting it up, or perhaps not really so much today. Everyone kind of sitting on their hands, waiting for the big Fed to come yet again. I was talking with someone earlier today, and they're like, didn't the Fed just talk? And I was like, yeah, it does seem that way, doesn't it? Every third day, the Fed is contractually obligated to speak their mind on all issues, various and sundry. Of course, we are streaming this live and recording it Monday, September 19th, for all of you playing along after the fact, listeners. And again, not the most action-packed of days. The S&P closed, I think, literally up a handle. So there you go. So up one handle, not even a fractional percentage move there. Same thing with the Dow. The Q's having a little bit of some action after getting some surge in action last week. This week, perhaps not so much. And the ye old VIX cash taking the weekend back and a little bit more, closing up right about 0.2 of a point or so to about 1560 or right around that range. Todd, it's been a while since you've been in studio. I know you guys are busy over there in the land of OptionMonster. Last time you were in studio with us, I believe you were taking us on a journey to all things, Brazilian utilities. So I know you guys are always have your nets cast pretty far over there at OptionMonster. What caught your eye in today's activity, and do you indeed have any interesting nuggets or tidbits to share with us today?
Nothing in particular. We have seen some, oddly enough, some activity in different REITs, people buying into the REITs, looking, again, it's everything's around the Fed, and I know, sometimes, I could give you a 60-second macroeconomics course when people, everyone's looking at the Fed. What are they going to do? They're going to raise rates. They're going to lower rates. They're going to keep them here, and everyone seems to have their bowels in an uproar. You hear the terms hawkish and dovish tossed around, and I know a lot of
That's vivid imagery, sir. That might be a good name for our show. Our bowels in an uproar. That would get the iTunes censored pretty quick.
There we go. It is interesting that this is everything that everyone is looking at. I really think this, with what the Fed's going to do with the monetary policy, it's really a barometer on how our government sees our economy. And so people extrapolate that out into the equities. They're looking for an opportunity where, if interest rates do move a little bit or don't, in this case, it looks like, indeed, they're going to remain dovish. They're not going to raise rates, at least now. They probably don't want to impact the election. And so that's why we're seeing some people buying into the REITs. But again, that can all change. I mean, the one nice thing that we have had in October is volatility, and it's a little refreshing than sitting around on our hands like we did all of August.
Yeah, August was a bit of a quiet period, shall we say, to use euphemistically. Our bowels certainly were not in an uproar. No, I'm going to remember that whole show. That's just a gem. You can't let that one go. That's good. I think we have our title like 2 minutes into the show here. Mr. Rock Lobster, I know you like to throw out some gems of your own. Let's see if you can top having your bowels in an uproar. And then while you were calming your bowels down, what caught your eye in today's activity?
There's way too much visual strangeness going on in the show right now.
That's why it's a radio show, sir.
That's the best thing. People just get to listen and imagine like the old days, before that TV thing came around. Well, the funny thing is, we had the volatility products moved a lot. Vol futures moved a bunch today on really nothing. We rallied, but yeah, it's all. I think the Fed. What's worrisome, unfortunately, is the Fed has taken pretty much the volatility out of or they're taking a tremendous amount of vol out of the market by trying to massage everything to such a degree. It's sort of, what is it, the Pareto principle, that trying to get that last 20%. You got 80, you got the economy kind of going back in shape, and they all these central bankers, same thing, just trying to pile more whatever stimulus. I don't even know what you call it anymore. It's so dumb. But the equity markets are kind of stuck on it now, since basically everybody has decided the interest rates are volatility. That's what you do. Is for us, just the fundamental stuff about trading volatility or trying to find stocks, using the basics to look for stuff. You got to look for bargains. From a vol point of view, if the Fed does nothing, we had some rate tantrum. I think the Bank of Japan, somewhere I was looking at some new snippets about they're trying to ease their easing or trying to get out of the whole thing because I think they're at diminishing returns. And it will be to the extent that the stocks or whatever the next group of lemmings, how they go over the cliff on it. I don't know when that will be. It might not ever happen, but it has to at some point come undone. As far as they're eventually going to get out, and then everybody realizes that everything they've been doing was pretty much of a waste anyway, and you just sort of go back to what we'll call loosely normal. But from a vol point of view, I think you could see VIX in the 13 handle by the end of the week. Fed just says, we're not doing anything. Sorry about all the noise we caused, but we're really not doing anything because there's no reason to. There was a little inflation. I think the CPI, is that starting to tap 2%? So there are those things that might have to force the Fed to start raising. And instead of all this, ridiculous month-to-month spoon feeding, which is going to be with us for a while. So at least until December, and when maybe the rest of the world stops doing whatever they're doing. So from a vol point of view, I think volatility could see some lower numbers. And the last, and the election is still kind of a wild card, not being, too political, but, there's one candidate that's kind of status quo and one that's kind of not. And generally status quo, people kind of like that. Not status quo, there's some freakouts about it. So we'll see how that goes. But those are November options. VIX is pricing mid-October. So I think there could be a pretty soft spot in the volatility because a lot of that October action, it might be around earnings, but it's not necessarily around the election. So that volatility can become very soft. Vol can come in hard. I think it could, back down to 13, maybe 12.5, but only be for a week or two. And then the, VIX starts to pick up November and starts picking up more of, you keep going along the calendar. So it looks like if everything goes to how the Fed will say, since that's the way you trade volatility these days, the Fed will have an announcement and then they don't. Vol comes down, everybody looks at each other, stocks don't go anywhere, and you get some kind of crazy vol low again, which is generally good for some kind of bounce or scoop. And then on we go to whatever the next thing is, or waiting till December, I guess. So, but as far as we got kind of a quick vol kick, but notice one thing is just how fast the market turns either up or down and how fast they ramp vol up. I mean, from 12 to 20 is pretty big considering there's almost no news. I think there was pretty considerable short interest in the vol products after that August, as you guys are alluding to. A lot of that probably got covered. So I don't know if there's going to be a lot of support for the vol on the way back down if those futures start to go. Like I said, we had pretty good range in the vol products. Today, they're hitting the vol futures after hours again, closer to the lows of the day. So, again, if the market's not moving, it's hard to keep the vol up for an extended period of time, and that is where we are today. After Wednesday, different story.
Got umbrage, we got soft vol, all sorts of fun terms to throw around there into the mix. Speaking of the mix, it hasn't been a lot, like you guys were saying, firing off certainly most of August. September already orders of magnitude more active than all of August was. One of the names that has been lighting it up from an activity perspective, I know, Uncle Mike, this one speaks to your wheelhouse. This is, of course, the old fruit company Apple having one of their best weeks ever. Last week, gapping up about 12%. That's only last week, only 5 trading days, picking up about $75 billion with a B in market cap. So that's saying something when Apple has one of its best days ever. They've had, or best weeks, I should say. They've had quite a few good weeks over the years, and last week certainly one of them. So I guess all that malaise about the iPhone 7 certainly hasn't impacted their stock. Maybe it's the love for Apple Watch 2. I don't know, but something's really driving them there. Either way, Uncle Mike, is all this Apple upside making you reconsider? And what else is catching your eye out there in all things active this week?
All right. So in terms of Apple, no, it's not making me reconsider. I still don't feel it's innovative enough. I think that with what's happening, it's Apple. They do a very good job of making sure that they have a new phone ready when the old phone expires a lot of time. Not expires, but when people can't upgrade. Now, with less phone companies, it's not quite the norm anymore to just let your wireless provider, Sprint, Verizon, T-Mobile, or whatever, pay for your iPhone like it used to be. It still kind of is, but nonetheless, Apple's very good at having a new phone ready when most people are ready for a new phone. So kudos to them for that. We talked about some of the things that they have on the new phone on previous shows in terms of the wireless earpads or earphones, the fancy camera, things like that. And I think it's good, but it's not by Apple standards. I think it's below the high standard with which Apple has created to put their stock to the stratosphere with which it has. The all-time highs for Apple is 130, or all-time high for Apple is 134.54. I'm showing. That was a little over a year ago, and so it's going to take a lot to get back up to those levels, I believe. And I've said it before on the show at least 6 trillion times, is that in order for Apple to start getting the movement with which they once had, they're going to have to come up with something very new and very innovative that the rest of the world doesn't have yet. They're going to need to come up with an iCar, or they're going to have to come up with something that lives up to the standard with which they created when they came up with all the products with which they came up with to begin with. In terms of some other things going on in the marketplace, we did have some news out of New Jersey and Minnesota over the weekend with the slasher and the some not huge bombings, but some terrorist-linked things that had happened on our home soil. And so what kind of surprised me when that happened is that if you look at the futures trading from last night into today, we actually came up a little bit. So I'm only assuming that either, number one, the market just didn't care about what happened because it wasn't big enough news, or number two, maybe they felt that, okay, nothing really bad has happened and that's it. So that may have been a positive reaction to the marketplace on Sunday night. Now, of course, this morning, it appears that they have someone arrested for the activities in New Jersey. And with that, we have a lot of things right now that could become big news, but really haven't as of yet. Terrorism, that's always the case. Something can always happen along those lines. And we could argue that we're due for something like that in America. I hope it doesn't happen, obviously. I hope the cowards just continue to not do those things. But we still have not had anything major like that in a long time. We do have the first debate coming up a week from tonight between the Donald and Hillary. For entertainment purposes, folks, I can't wait to see what happens on that. And we do have the election coming up in November. And like Andrew said, a lot of times we do have the status quo versus someone who is not so status quo. And that's going to be, there's going to be new, I do believe the market is going to be affected by that one way or another. Now, to add to all this, we still have not had a ton of market movement. We've pulled back a little bit over the last couple of weeks, but we still, by comparison, we have not had a lot considering all the news that's happened so far this year. If you were to tell me back in January, back when China was going to go belly up or whatever the case may be, that we would be at the levels that we're at right now, I don't know if I would have believed you. But the fact that we had come to the levels with which we are and have stayed at the levels which we are, then I really wouldn't have believed you then. So with all that being said, there's a lot that can be going on, combined with earnings season coming up in October, that can really get some type of market movement. The fact that we're only up 4 or 5% approximately in stocks so far this year is really surprising, considering where we've been and what's happened so far this year. So if the Fed does absolutely nothing on Wednesday, which I'm expecting they will do, and vol drops like it does, we could be in for a rally. So stay tuned, folks.
One thing I do think that's really interesting is how calmer, cooler heads have definitely prevailed. In the day when it was a fairly significant terrorist attack with a lot of bombs, we were kind of caught off guard. No one was, it sounds like the person that perpetrated these went off the radar and was able to place these devices, and one of them actually went off and injured some folks. But in the day, that really might have spooked the markets. But what's really amazing is how, if someone wants to tell you that we're not great, this was solved within 48 hours. They were our Americans, we have people who are watching this, reacted to it, went to work and figured it out and solved it within 48 hours. That is truly remarkable. And that's why I like the cooler heads prevailing in the markets. And the truth is cooler heads prevailed. Something went down, and we were able to, as a society, we had the enforcement in place to identify, react, and resolve. And if you don't think that was pretty great, then I don't know, you got to be nuts. Your hair's got to be orange or something, or something like that. But 48 hours, that's impressive.
Apparently, we all owe a collective debt to the myriad bag thieves in the New York area, because they moved the bag that was supposed to blow up, second device. That's why it didn't blow up, apparently. Bag thieves stole the bag, left the bomb, and that screwed up the bomb. And then in New Jersey, apparently, they also were stealing that bag and found, hey, there were bombs in it. Let's call the police. So the bag thieves who were stealing the bag called the police on the guy. So you got to love it. I guess there is honor amongst thieves at the end of the day. Terrorism is a bridge too far for them. But interesting, lots of crazy stuff to talk about. So without further ado, let's keep on rolling, including some home run calls already knocking out of the park here in the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the portion of the show where we don our fedoras and grab our sidearms, because we're heading into the darker, deeper, scarier side of the options marketplace. I'm going to kick things off actually looking back at one that I wasn't able to chat about last week, but you guys all had fun in my place talking about this one. But this one already lighting it up. This was BLOX, ticker symbol BLOX. Yeah, Infoblox Inc. And you guys were talking last Thursday, I believe, Mr. Rock Lobster, about someone coming in and just scooping these OC25 calls. Back then, in that lofty yesteryear of Thursday, the stock was trading under $23, about $22.95. Today, the stock up over 15%, trading $26.35. Let's see, intraday, how high did this baby get? Yeah, $26.35 is the high, so pretty much closed right on the high. That's showing some love for that name there. You guys were speccing at the time last week that perhaps some rumors, some takeovers were in the works, and clearly something was indeed afoot, because this thing is running. Those calls that they bought, a total of over 1,000 contracts for 40 cents, are now trading around $1.35. I saw them go up today. They went out $1.25 at $1.40. 1,000 did go up today, so maybe someone trying to close out on that paper. But still, shall we say well-timed, Mr. Rock Lobster, as this person making out with anywhere between 3x to 4x, depending on where they got all their prices here. Not a bad return for a simple weekend, huh?
Last week I thought Toots and I were talking about these. Like the vol's low, stock hasn't moved much. None of it looked. It all smelled like if I was an exchange person trying to like look at some front running people. I think they bought just enough to keep under the radar. So they made a buck 1,000 times. They made 100 grand, but we'll see what happens. Maybe something leaked last Thursday, but I mean, kind of instant gratification. BLOX is so it looks like a private equity fund is going to buy them out. So I don't know. It just it had all the look of something getting bought out, and lo and behold, it did.
Surprise, surprise, how that works, huh, sir? But yeah, close to 1,000 going up today. So maybe our friend trying to take his money and run. I wouldn't be surprised if someone perhaps tries to step in and says, "Whoa, hold your horses." Maybe put that account on freeze for a little bit, at least to review. That is pretty well-timed activity there. But we'll see. We'll keep an eye on that one. I'm going to assume that about 1,700 contracts of open interest going to be a wee bit smaller tomorrow. We'll see how that fares. Meanwhile, let's move on to our first actual UA for today. And instead of peering into the rearview mirror, we shall look ahead, this time with Etsy, where you can go make your own fancily decorated rearview mirror. Of course, ticker symbol ETSY. Closing today, $13.36, off about 1.5% on the day. So the name that does about 1,300 contracts a day, doing a little over 5,000 today. Get this. This might be our winner for recent call to put ratios here on the show, Mr. Rock Lobster. 287 to 1 calls over puts. Yes, about nearly 5,200 calls going up, only 18 puts. Now, that should tell you where all the action was today. If you pull up Etsy on your own screens, playing along there, listeners, you can see for yourself. It'll jump off the screen where all the paper was. It was indeed in a mega block of 5,000 of the November 15 calls going up for 70 cents. Actually, I apologize, 5,015. Going up for, again, 70 cents. That's all on zero open interest. So clearly opening paper one block on the Amex going up through auto execution. We did see some stock going up with it as well, about 175,000 shares. That would be not exactly, but close to delta neutral on this trade. Looks like, given the prices, it looks like it's your straight up sell some calls, buy some stock. Interesting name. To do that if they are indeed drawing that line around that 15 level. This thing has been flirting with that level for some time, looking back over the last few months, and it's kind of bumped up against the 15 handle a few times and kind of retreated and kind of been in this about 13.5 to 15 range for the better part of the last few months. Clearly right now at the lower end of that spectrum, and going back a year or so, this thing was back up at those levels as well, right about 15, right about exactly this time, about a year ago again, after having flirted with much lower levels in between, getting down as low as in the 6 range back in February, late January or so. So interesting stuff. Mr. Rock Lobster, what you take here on someone? Looks like do you agree with that? This is call selling and stock buying, or what your take on this one?
I think so. None of it went up mark tide, but
what fun would that be if they did our job for us, sir?
It amazes. Yet this is where we are in life. You remember the old days on the broker? We're putting up with stock. All that's who knows. But when you couldn't get away from them.
Get the hell out of my way. Yeah, I don't put the stock up. Get out of my way.
Are you matching? Come on, you're not picking up the stock.
How are they now?
Anyway.
Call the Cincy.
But yes, so for Etsy, this is one of the classic stocks where, okay, internet, it's got a following. It IPOs. Everybody loves it, and then their results kind of stink. It was kind of like similar to Facebook, definitely Twitter. And the stock goes from like 30. I think it traded as low as $6. And it's been kind of coming out of the basement. I was in we were in our pit chat today. I'm looking at these 15 calls. They look very cheap to me. For actually, I was looking for them for $1, but since I'm cheap and I usually wait, now they're offered at 90 cents. But this customer looks like they sold calls for 70 and bought stock. None of it price tied, but if when the block of stock goes up 1 minute after the calls, it kind of looks like a duck and smells like a duck. But all the pricing says they had to sell the calls because it was literally at the time almost on the bid, and they paid up for stock, kind of through the offer at the time. So, and the next thing is, if you look at the liquidity, that block of options is almost as much as all the entire open interest for Etsy is in the first. It's definitely, there's no open interest in November.
Etsy, not exactly an active name, shall we say.
Right. So it was loved, and now it's just hated beyond belief. As a contrarian type of person, I kind of like those sort of things as an opportunity, but I know all the crafters like the website. So it probably is something like a going concern, and it looks like $1 billion. It feels like it's a little cheapy relative for the type of reach the website has, the eyeballs of the crafters and stuff. But this person, it looks like anyway that they front spread the thing. So could work fine. It's not, I just, after living through, the 90s and the 2000s, front spreading, selling lots of contracts in internet stocks, it never appealed to me. After I watch a bunch of them go up like $50 or $100 or $90, I'm like, I don't know how many contracts I want to be short. I'll sell some spreads, but I'm just not going to go. I'm not going to go wildly whack some calls out. That's just where my head is on.
How high can AOL go? It's got limits.
Exactly. I remember Amazon. This was like, before it had gone all the way back to like $13 or $9 again before it made its current run. But, Henry Blodgett, stock was $100. He's like, well, it's going to 400. It was like 100 the next day. It was crazy. So, internet, there's, I don't know, I guess that has just stained my mind for a long time. So.
I miss those days. What does it do? I don't know. It's internet. Right?
It's internet.
That's all that matters. That's all that matters. I literally had multiple people tell me that over that time period, which is fun to think back on now, and say, oh yeah, it's online. Who cares? Pets.com. What could go wrong?
Exactly.
All right, let's move on to we gotta hit all things energy. Wouldn't be the odd block without some energy. Let's move on then to Enterprise Products Partners LP. This is a provider of midstream energy services to producers and consumers of nat gas, so liquids, all that kind of fun stuff, crude oil. They do all sorts of energy-related fun stuff over there. Ticker symbol EPD, closing $26.74, up about nearly 3%, about 75 cents or so on the day. It's something that does about 5,500 contracts a day, doing about 3x that, about a little over 18,000 contracts today. 3.5 to 1, a little bit more reasonable call to put this one rather than 287 or whatever the heck it was in that last ridiculous name. As we move on to, let's see, here we go. It was the Nove catching our eye this time, a little bit farther out. Not all the way out to Jan, not quite as close as Ox, splitting the difference going out to Nove, where the Nove 28s were lighting it up. Initially caught our eye, a block of 2,000 going up. Looks like paper selling for about 36 cents as the day went on, a little over 2x going up, a total of about 4,200 and some change going up on that strike at prices around that level. Again, all opening, no open interest, similar to what we were just talking about. No open interest here in November yet again. Looks like that was the print here. Didn't see any stock going up with it. If they were indeed blasting these out, they're kind of wearing it right now. They're 35 bid at 50, so they're bid a little bit against them right now. If that was indeed the case, a straight up call seller. Saw a little bit of paper on some of the other 28 strikes as well, including Dees having, looks like perhaps a vertical, Dees 27, 28 going up about 3,500 times. And the rest of the paper, that's pretty much the size paper out here. And Enterprise, looking back at the past few months out here, this name has flirted with higher levels up to very close, actually touching 30 ever so briefly back in July before coming off again. And our friend here perhaps thinking 28 handle and no farther. Mr. Rock Lobster, what's your take here? No stock, just you on board with the call sale? You thinking something else funky is lurking underneath here?
It is feeling like a kind of a buy right. Somebody basically just sort of hit the bottom of the day. I mean, you're selling those calls for 20 cents. What is that, a 1% yield over the equity? So it's not, you're not getting rich on that call sale, even if you're right. So it's probably against an equity position, I would guess. Maybe it's the pension fund of the city of Chicago Trying to make those pension payments.
That would make a lot. Actually, that trade makes a lot of sense now. Now that you put it in that light, the geniuses running our pensions here. Yes, clearly, that's far too much yield for them. They would do it for a penny.
Right, exactly. I'm just whack them out for 20 or whatever it was like. So, I think the stock just lifted right after that sale. So, it's feeling like that kind of thing. What's funny is like I'm looking at stock like EPD, these MLPs are all starting to push their dividends up just a little bit, like a penny here, half penny here. So I guess they've adjusted to the new oil regime. Just like Kinder Morgan, you're seeing all of these MLPs, and this yield's what, like $1 something, so it's about 5%.
Actually, it's up over 6%.
Yeah. So, and the yields are coming back up. So, you do that. You buy the stock, you get your 6% yield. You whack these calls out. You picking up another 1%. All of a sudden, maybe it's a 20% yielder per year, and it's kind of like the good old days are back with these MLPs. So, that's what the paper feels like. If you just sold those calls because you think the stock's going down, I would say good luck with that.
Yeah. What could happen? Can't go to 400 in AOL, right? How could that possibly happen? Pest.com, that worked out all right if you had some time. But the rest, if you had a long time horizon, it worked out for you. All right, moving on to our final name. This is the one I know everyone's been waiting for. Everyone, when you wake up in the morning, the first thing you do, you get your coffee, maybe you go to the bathroom, then you check your tickers. And this is the first I know everyone checks. It's, of course, PAGP, PAGP, Plains GP Holdings LP, a market mover, if ever there was one. Closing today, $11.35, pretty much unched on the day. So it wasn't underlying that got us all excited. No. It was someone trying to approximate it or doing an interesting attempt at it. It looks like someone lighting up a pretty sized bearish risk reversal out here, or as the old folks, a.k.a. Andrew, call it a combo. This ACK 11-12 risk reversal. See, Mr. Rockoffs, I'm not sure if they taught you this when you got on the CBO, but when it's different strikes, it's more of a risk reversal. When it's the same strike, it's a combo. We can get into this later in the mail block. But ACK 11-12 risk reversal. Looks like paper paying 30 cents for the put, selling the call for 20 cents, doing that 6,000 by about 6,000 up even. Looks like it was a ratio at first, 6,000 by 5,000, another 1,000 coming in to even it up right around 6,000 a piece. Went up in 2 blocks over there on the ARCA. Vol coming off, not surprisingly, a little bit, but particularly on the upside. So it could be someone with some underlying wanting to hedge it, and also perhaps trying to defray some of the cost of doing that. This name has kind of been vacillating around for the better part of the last 6 months, even though it has net drifted higher. It was trading back way back in earlier in the year, in April or so, was trading back in the 8 to 9 handle range. So it has rallied substantially, even though it has been a little bit volatile while doing that. It hasn't been a straight line up for good old PAGP. Mr. Rocklaps, take us home. What are your thoughts here on your quote-unquote combo in PAGP?
Well, combo. First off, you're a pup, so all the stuff that might have happened before.
Take your umbrage, you old Mainer, you.
And but it has the smell of, again, yield play. That $40 a barrel oil is looking kind of solid. These stocks, they're not going down anymore. These MLPs, there's a little bit more vol on them than there used to be. I mean, PAGP never used to be a $35 stock. It was probably more like a 20 or 35 vol stock before the whole oil debacle. It was a $30 stock to boot. So I think you're starting to see some comfort with the yield play in this space, which was a hugely volatile space, not like 2 months ago, 3 months ago. And look at where these stocks were in January, February. So it is I just think there's comfort there. People are, I think, owning some blocks of stock that they bought at better prices, and they're selling juice. So this combo in this case, I believe, is just selling a strangle in the particular stock.
We'll leave it.
All combos, all strangles are combos, but not all combos are strangles.
We'll save this raging debate for the mail block, because it's time for the listeners to get in on the action and kick on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome back to the Mail Block. Like the man said, this is the portion of the show where you guys get to take the reins with your questions, your comments. Before we get into that, Todd, I know you're sitting here. We had a little bit of chance to chat here. Clearly, you agree with me. Risk reversal versus combo. You're on the risk reversal fence, right?
Oh, I'm definitely on a risk reversal on that one. In fact, I mean, when
you didn't walk on the floor of the SIBO in 1973 like the Rock Lobster did.
No, it was 74.
Oh, okay.
or 80 something. I see someone who's just long that stock there, and I would think they're actually buying that 11 put, selling the 12 call, and they'll take their 8% yield. And if the stock were to bottom out on them, they know they're stopped out. And if the stock goes up, it doesn't really matter anyway.
Only costs you a dime, right? At the end of the day, it's not too bad of a deal. All right, this is the portion of the show where you guys get to chime in with your questions, your comments. A lot of people chime in already, Mr. Rock Lobster, on what you were saying before about is the VIX going to hit 13 by the end of the week? A couple people chime in. I like their brevity on Twitter. Nope is the answer. So no on that. And also wondering if, when you said the VIX was soft, does big money know something we don't about market strength? And I'll let you ponder that, Mr. Rock Lobster, because we have a new segment here at the top of the Mail Block. You guys over there at Options House, by way of OptionMonster. I'll let you clarify for that for our listeners in our second there, Mr. Todd. But we've been talking about this for a while, kind of featuring some interest. You guys, obviously, particularly at OptionMonster, get a ton of questions over there from your clients. So why don't we, and all of your research users, so why don't we feature some of those on the Mail Block with a segment we're going to call the Options House question of the week. Mr. Todd, I think you came armed with a good question, I believe, from a listener in Arizona. I don't remember the name. So why don't you have at it, sir? What's your Option House question of the week?
Yeah, so first, I do have to clarify.
Standard disclaimers apply.
Standard disclaimer. I am the president of OptionMonster. OptionMonster is a research analytics media company. We are affiliated with our broker-dealer Options House because we have a shared parent company, Aperture Group. So affiliated, but entirely, we are legally separate entities. The broker-dealer does one thing. We do some research analytics, market commentary elsewhere. But we do get this question. I did get this question from Seth in Arizona, and it's not just the only one. We get this quite frequently because a lot of people are wondering why you would do one spread versus another spread, and unless you really delve into the options, it can be confusing. But some people will ask us, what's the difference between buying a debit call spread versus selling a credit put spread? And, you'll often hear, hey, you never want to buy options, you only want to sell options. And it's rather interesting that you see in this particular scenario that the risk reward of those two positions is identical. Buying a debit call spread and selling a credit put spread, you have very definable risk. You know what kind of profit you can make. You know what you could potentially lose. The risk reward is, and it's the same. It is identical. There is absolutely no difference between the two. The question really is what kind of mentality, what mindset, what's the psychology of the investor? Are you someone who wants to get your reward now, or would you rather wait until later? On your birthday, do you want to eat your birthday cake before you have your Brussels sprouts or afterwards? So when you buy a debit call spread, you're paying something now, and you know what you can make if it goes your way, if the stock were to go higher. You know what you could lose if it goes down, versus selling that same credit put spread. You're going to collect money today. You know what you can make, what you sold it for, and again, everything is very defined, but the risk reward is identical. And so when someone tells you, hey, I can't buy options, I can only sell them, well, then maybe selling that credit put spread is better for you. Other people just might see it better or understand better by buying a debit call spread instead. But it's interesting that they are essentially the same position. And when it comes to options, understanding that you can do different things and end up with the exact same risk profile, it's when the game starts getting a little fun.
It is kind of like telling people to eat their vegetables a little bit. They're like, oh, I can get this juicy credit. Why should I outlay, all of this money for it? And kind of walking them through the different pros and cons of that. But you can see, why should I pay when I could collect? That's a common question we receive. I'm glad to see you guys over there fighting the good fight over there in the land of Monster as well, trying to set people straight on this. Speaking of setting people straight, you remember this one, I think Mr. Rock Lobster, Mike, you probably do as well. I don't think you were on this episode. This came in, I think a couple of weeks ago, we were discussing this question from Richard Russell. Now, we didn't really know the heck this guy was talking about. His question wasn't too precise. He asked us at the time, he said, can you explain in detail how you use the spread trade parameters to predict the anticipated underlying movement at expiration? So we kind of did our best with very general terms because we didn't know what the heck he was talking about. So he did write in to clarify. He said, he's very precise, I like this guy. He says, to clarify my question, at the 14-minute mark of episode 553, you state that a $6 straddle was pricing an 8% move following earnings. Is this just the current at-the-money straddle? So that's what he was talking about. He was asking us how we got these numbers we were talking about. If he's talking to, I believe that was in the tail end of earnings season there. We like to give a lot of rundowns, obviously, here for what the straddle is predicting. And that's very, very basic math. I don't remember the exact name we were talking about on that episode there, Richard. But effectively, the straddle, you take the price of, usually you go as close to expiration as possible. So in this case, we were looking at a weekly straddle, that first week, whatever percentage of it was left, a couple of days, and you add up, and yes, it is at the money. That's where you're going to look because that's where the stock is trading right now. That's what the market is pricing in. And then you just add up the call and the put on that strike. Very simple math. And now you have, in that case, it turned out to be a net $6 straddle. You put that over the price of what you're talking about, and you're going to have your percentage effectively of how much the market is expecting that underlying to move. So it's a $6 straddle, let's say, and you have $100 name, let's say, is trading at $100. It's expecting a 6% move. That's not telling you any direction, obviously. That's telling you net up or net down, six points in either direction. So that's pretty much how we do that with basic math. Thanks for clearing. I like when people follow up and explain their questions in more detail. Sometimes it's the challenge is figuring out what they're talking about in the question.
Yeah. In this one, I mean, he says a $6 straddle with an 8% price move. So clearly, whatever they were looking at, it must have been something just below $60.
It wasn't a price line or anything like that,
right? Because if it was a $60 strike or a 10% move would have been $6. And since he said it was an 8% move, whatever you were talking about at the time must have been pricing just below 60 at the time. So
I'll have to see if I could.
That's how. I mean, the math would work that way.
Yeah, math is fun. I'm trying to see what the actual name. I don't think we have it here in the show notes for what exact name it was. Might have been Lululemon. Might have been Lululemon. I don't have their current price. I think we were talking about that on that name. So thanks for clarifying there, Richard Russell. We love when people follow up with answers, or at least more concise data on their question. Let's see. We got time for. We did the question of the week from our friend in Arizona. Here's an easy one. This one comes from Fred. We got time for this one too. He writes in a lot, and he asks, I've listened to some of your broadcasts, and they were over my head. Well, I'm sorry. Which one should I focus on to listen to as a beginner? Well, this segment, obviously, of this show hopefully isn't too far over your head, unless you get into Rock Lobster's, combos versus risk reversals debate. But aside from that, this segment of this show, the strategy block, is always a fun one. So if the rest of the stuff, if you're just a complete novice to options, then maybe you can skip ahead. We don't mind. We won't hold it against you. Get right to the strategy block, and maybe some of the listener questions is always a good one as well. And also, we do a whole program on this network called Options Bootcamp that is designed specifically for guys like you. So if you are the proverbial retail stock trader, you're looking for an entry point into the world of options, you want to learn about how these things you're looking at with stocks and how options apply, go back either to our site or to iTunes, wherever you get your shows, or through our app. The app might be the easiest way to do it because it goes all the way back to the beginning of all of our shows, whereas iTunes kind of cuts you off after like 50 episodes. Go back to episode 1 of Options Bootcamp, play them all in a row, and there's probably about 100 episodes there now or close to it. And that's specifically for guys like you who are going from 0 to 60 in the world of options. Check it out. Great show aimed specifically at guys like you. That's all the time we got for questions this episode, but now we're going to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Like the man said, this is the portion of the show where we break down what we're keeping an eye on for the rest of this week. There's a little thing coming out on Wednesday. I think it's called the feed. I think I'm pronouncing that correctly. I'll have to go check my spelling on that. But I think it's something people are paying attention to. That would be on Wednesday, 2 p.m. Eastern, 1 p.m. Central, when they continue the will they, won't they dance, Yellen and her crew. And everyone, of course, will be waiting on pins and needles as they have been since this dance began about a year ago, which is always so fun. If you're into more concrete stuff, earnings season kind of done, but there still are some names coming out, including some home builders. So if you're into that section or that segment of the market, in particular, KB Homes and Lennar Corp are coming out on Tuesday. Also got Adobe still, FedEx. There's still a few names to pay attention to if you're into the bathroom retail segment. Then Bed Bath & Beyond, lighting it up on Wednesday, CarMax, Herman Miller, and good old Rite Aid. But I think everyone's going to be paying attention to all things Fed. That said, Uncle Mike, what's on your radar for the rest of this week, sir?
As you said, all things Fed.
I think you pronounce it feed.
Oh, is it feed?
It's French.
As you heed, all things feed. How's that?
There you go. Quite the rhyming man, sir.
There you go. So there's really not a lot else besides that. I'm curious to watch how those new Wednesday options react to it. With everything that's going on, I think that from an education standpoint, I will likely not be in one of those this week, but I am going to look to see how the options react that expire on Wednesday. So that's the main thing that I'm watching this week before our next show anyway.
And Mr. Rock Lobster, aside from lamenting your lost fish tacos, what's on your radar for the rest of the week, sir?
Yes, the fish went out with the tide.
Is bass good for tacos? I never thought of it.
Oh, my gosh. Oh, yeah.
Bass is the fish there you go. I'm apparently a Luddite in the world of fish tacos.
Yeah, well, come to Maine and we'll throw some tacos at you. Tell me what you think. So, yes, Fed and my 13.5 VIX for the end of the week. So you can tell that to all the people listening on Mixler.
Umbrage. Well, I'll tell you, the guy who...
They can go buy some VIX calls.
One of the names was unpronounceable, and then one of them, I'll try to find the name for you so you can mock them roundly. As we move on to Mr. Todd. We can get a nickname for you. We don't have one for you yet. Mr. Todd, nicknameless, Fed, or the feed, depending on how you pronounce it. That aside, what else is catching your eye for the rest of this week, sir?
Well, first, Andrew, instead of fish tacos, can I get a lobster roll? I'm more of a lobster roll kind of a guy.
Yeah, you think
I grilled some lobster last night.
That would be the main delicacy. Yeah, I'd probably go to Maine for those before I got the bass fish tacos.
Yeah.
They are tasty.
You want to know how the markets work. If you want to get a lobster here in the Midwest, they're gonna charge you for it. You go out to Maine, and those things they give them for free to everyone.
You drive over the border, they give you free umbrage and a free lobster.
That's and a free lobster.
That's how it works.
Like $5 for a cooked lobster, 2-pound cooked lobster, wherever you want it. So there's your reason to go to Maine. This week it is, and there is nothing else to really be looking at. I don't know why. It's just what everyone's talking about. The Fed sort of indicated, again, we've mentioned this at the top of the show, that they're probably going to remain dovish, meaning they're going to not raise interest rates, that they don't want to slow down the economy, so they're going to keep the monetary supply a little loose. Probably something to do with also not wanting to impact the elections at all. They don't want to do anything right now that could potentially have an impact in November. So we'll then be sitting around and waiting to see what happens in December. If they want to start getting hawkish or raise interest rates and start tightening the money supply because they think the economy can handle it. Personally, I think that they need to do that anyway, because if things don't get any better, they really don't have any more bullets in their gun. They can't keep lowering it. We've seen what zero or negative interest rates do to spur economic activity. It hasn't worked for Japan for 2 decades. And in Germany, the only...
Japan's lighting it up. What are you talking about? It's the place to go for economic growth.
Yeah, Germany toyed with negative interest rates this summer, and the only economic activity it spurred was everyone went and started buying safes, and the safe companies, they couldn't keep up with demand, so people could they weren't going to hoard their cash in a bank because they weren't going to get it back, or even in a safety deposit box. They went and bought safes, and they're hoarding their cash in their bedroom. So clearly, negative interest rates. When there's a mindset of saving, lowering rates even further into that negative territory, just unless people aren't that comfortable spending, they won't. So clearly, it's a much more delicate equation than just changing interest rates. They obviously have to look at the true health of the economy and inflation as well. So that's it. It's all going to be macroeconomics, and that's what everyone's looking at.
Delicate equations, like those straddle equations.
Exactly.
Very delicate. Very delicate. I'm curious what name we were looking at. I think it was Lulu on that show, but I'm kind of curious. I'm going to go check it out myself. But we have to go, listeners. That music means we have come to the end of yet another exciting sojourn through the world of options. By the way, Mr. Rock Lops, if you want to know who's giving you umbrage here, I was on Twitter this time. It was Mike the Bookie and It's Prob. I think I'm pronouncing that right. I don't know. It's not really a pronounceable handle. So there you go. They're selling they're buying what you're selling, or vice versa, I should say, on all things VIX. All right. And before we go, let me check back in really quickly one last time with each of my cohorts. Let's start with you, Uncle Mike. Haven't had a lot of chance for some strategery this episode. So what's cooking in the land of all things RCM alts?
Well, if you guys are looking for a financial advisor, kids are back in school, so now's the time to talk about such things. Feel free to contact me at 312-212-3531 or send me an email at m2saw@rcmfs.com.
All right, and Mr. Rocklaps, I can see you having taken so much umbrage over there. So before you collapse into an umbrage fit, what's coming down the pike in the land of the pit?
You mean before I collapse into a heap of umbrage on the floor?
Yes.
We should have a class either this Saturday or next Saturday on these Monday and Tuesday, these weekly options, as we sort of try to price this stuff out and help our students. So it'll be our Saturday class, free for Option Pit Live subscribers or above. But all you new people got to pay. But if you're a subscriber, you get them for free.
There you go. Head on over to optionpit.com to learn more. And before we go, Mr. Todd, glad you can come on yet again. I like the idea of this. I like this OptionMonster Option House question of the week. We'll mix it up depending on who's on, obviously. But before we go, what's coming down the pike in the land of all things monster? We'll have to come up with some cool prizes too to give to our winners, our selectees of the monster / house question of the week, sir.
I like that idea. We'll figure something out there. We'll deliberate over that one. But OptionMonster is a place where you can find analytics, research, market commentary. You want to help identifying some of this unusual options activity. We've got all those tools available at OptionMonster.com. And again, we are definitely a very different entity, a separate entity from Options House, but the broker dealer. But we are affiliated with them. But OptionMonster can help you find ways to navigate these markets if you're looking for some of that help.
OptionMonster. That's no S, listeners. Don't make the mistake I do. Leave the S off as you're heading on over to OptionMonster.com. And on behalf of Mr. Todd and the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, for streaming live. We love you guys. For all of you guys giving heat to the Rock Lobster, we love you as well as to everybody sending in your questions. Keep them coming. And we'll see you on Thursday right back here on the Option Board.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.